So Urshad says, share your thoughts on interest rate increases. Markets are down compared to last year. No one knows the bottom of the market. Should we wait to buy for a while?
Irshad, good question.
Good question, Irshad. And that's, of course, very market specific, depending on where you're buying in the country. Yes, interest rates are going up. Not all markets are down. Some are down, some are up. And if you look back 4 years ago, 3 years ago, some markets were down, some markets were up. Will the interest rate increases affect certain markets more than others? It's obviously going to affect markets that have higher average prices, because that's going to increase at a higher percentage rate. So yes, there are certain markets that are going to be hit a little bit harder than others. And so we need to be very specific. My thoughts on this are, be very specific in the markets you're buying in now. It doesn't mean you have to stop buying, because there's going to be a lot of opportunity come available. If there are markets that are going down in value, if there are properties that are going down in value, that opens up opportunities that you may not have had last year. Keep your eye on what is happening to rents in those particular markets. Are they going down as well? Can you still cash flow if the rents go down 10, 15, 20%? How is that going to affect your cash flow? So regardless of what interest rates are doing, regardless of what markets are doing, we need to be conservative in the numbers when we're trying to make a decision on a property that we're going to be buying. But here's the number one key that I would suggest for anybody that is looking to buy in 2022, 2023, is certainly be very conscious and do your diligence on the market that you're going to be buying in. And if interest rates go up, if rents go down, how are you going to do cash flow wise? Very, very important.
So cash flow is really what's going to protect us from the ups and downs of every market. So whether we're making a lot of money in equity or not, when we don't have cash flow in our pockets and we, can't pay for extra stuff, extra bills that we have ourselves, that's when our emotion gets involved, and that's when we end up, having a hard time. So, Irshad, yeah, we can attest to the fact, because we've been through it in Alberta a number of times with our own portfolio. We can attest to the fact that, you may or may not, have highs and lows and all that stuff. But what's going to keep you level is whether you have cash flow. So you've been buying in high cash flow markets. I would say that you're, a whole lot more hedged against those kinds of things happening. But here's some other things you want to look at. In migration, Sean Skelly put in a post in Fearless, a video talking about in migration in the same areas that you're looking at. And in migration and immigration, so the differences between provinces versus between countries, those two things have a massive effect on the market. So, yes, are we seeing that people are going to have to start, not buying that higher end stuff because of interest rates? Yeah. But you know what? It's about time. Interest rates have been so crazy cheap for so long. Mm-hmm. It's about time. Yeah. So this correction is actually a good thing. Now, are people moving to the area or are they not? Here's another thing that used to be a really good measure. Now, because things are so kind of blown out of proportion, it's not so much. But in your area that you're buying in Irshad, it probably still applies. What is the income of the people in the area? So once the income starts outpacing, once the house prices start outpacing the income, then we have a problem. The bigger the gap, the more there's a problem. But if the incomes are rising, as well as, which is happening in your area, as well as the house prices, and they're rising together, we don't have so much of an issue. So look at the income prices versus the income, not the income prices. Look at the incomes versus the property prices, and see if they're matching or if they're kind of going like this. Where can you find that information? It's the Housing Affordability Index, RBC, TD. A lot of them, the big banks, have a monthly, if not quarterly, report that comes out that kind of talks about that.